Hello, everyone. Welcome to the George Realty Podcast. My name is George, your friendly host. I'm a full-time real estate agent with Equity Real Estate, and today we are going to be talking about a topic that should be of great help to you guys, especially if you are a buyer and you have put in your house under contract and now are just waiting for the loan to go through. So the topic is what not to do when you are under contract. I have invited a previous guest. Her name is Neely Zimmermann, and she is with Fairway Mortgage. So let's get started.
This is Neely.
Neely, it's George. How are you doing?
Hey, George. I'm doing great. How are you?
Good. Hey, listen, we are live on my podcast, and I wanted to first of all thank you for taking a little bit of your time. I know you're busy to be able to educate us and talk to us about a topic that I have already introduced, which is what not to do when a buyer is under contract. So, are you ready?
Yeah, and thank you for having me on. I appreciate the opportunity.
All right. I know you've been a guest before on my podcast, but I'd like to give you an opportunity to remind our listeners who you are, what company you work with, how to reach you, and all that fun stuff about you before we get started.
Sure. So I am Neely Zimmermann, a loan officer at Fairway Independent Mortgage. I work in the Draper office, but I serve the whole state of Utah and Texas also now. I got my license there. So I am happy to help with any purchase or refinance needs.
Awesome. Okay, Neely. So you and I had talked last week, and we came up with a list of items of what a buyer should not do when they are under contract. So maybe we could just go through those, and you can explain to us why, and then just kind of go through down the list. And this way, any buyer that works with you, with me, or with us, with anybody, knows exactly what to watch out for and what not to do. Does that sound good?
Yeah, sounds great.
Okay, perfect. So the first item I have on my list, what a buyer should not do when they are under contract, is open and close accounts. So let's go ahead and maybe you can elaborate on that one.
Sure. So the reason behind that is when we first apply for a mortgage, we're going to pull your credit report and we're going to monitor those accounts that are on that credit report. So if you open any new credit, we're going to have to get documentation for that new account because it's not going to report on your credit report right away. So it's just a lot of paper pushing that we have to do. So, I mean, it's not necessarily going to deny you from getting a mortgage, but it's definitely a bigger headache for all parties involved to document those accounts. Same for closing an account. That could hurt your credit score by closing accounts. So we just don't want to make any changes during the process.
Perfect. And so when you say open and close accounts, give us some examples of what type of accounts that would fall under. Is it credit cards? Is it bank account? Yeah, give us some examples of what those would be.
Yeah, so anything that's going to be reporting on your credit. So if RC Willie's having a big sale and you want to go buy a new sofa, don't open a credit account with them. Or if you're wanting to purchase a new car, you should probably wait until after the mortgage process is complete to make a transaction like that.
Perfect. And obviously that involves credit cards as well, Home Depot cards, any big box store cards, things like that, right?
Absolutely.
Perfect. That is a really good tip, and I think a lot of times, especially with new buyers, they're so excited about getting into a house that sometimes they make the mistake of going to RC Willie, maybe even the day of closing, or maybe a couple of days, before closing, to get their new, furniture or appliances, and that could definitely be a detriment to them being able to buy the house, right?
It could definitely impact the timeline of the loan, and it may push back closing dates, which would be pretty bad for everyone involved.
Yeah, cool. That's a good one. I like that one. Okay, so let's go down to the next one. The next item we have is apply for new credit, and that kind of we have into parentheses inquiries. That kind of falls with opening new accounts. So, but why would this be important, especially the inquiries part when you're applying for new credit?
Yeah, so even if you're just shopping for new credit and you don't actually open an account, it's still going to show as an inquiry on your credit report. And like I mentioned, we're going to be monitoring that report throughout the process. So anytime we see any new inquiries come up, we have to have you fill out some paperwork to explain what that is and if you opened any new accounts. So it's best to just, leave it alone until the loan is closed, and then you can go shopping for your new credit.
Right. And then whenever there's an inquiry on a credit, that actually also does that bring down a few points on your credit score?
It could, just depending on what type of lender it is that's inquiring on your credit.
Yeah, perfect. That's definitely one that I didn't really know, so that I'm even learning on this. So applying for new credit, if there are inquiries, definitely a no-no. Awesome. So let's do the next one. The next one I have on the list is leave your job. Don't change jobs or pay structure. So explain to us a little bit about how a buyer can kind of fall into this do not item.
Yeah, so I'd say the biggest hindrance would be if you're changing how you're getting paid. If you're changing employers in the middle of, your mortgage application, it's not horrible as long as you're getting paid the same. So if you're going from an hourly job to an hourly job and you're getting paid the same or more, that's okay. It would be if you're going from an hourly job to maybe a commission job. That would be hard for us to document because we need a 2-year history of commission pay. So because it's, I don't know the word I'm looking for. Sorry, I just drew a blank. It's variable income.
Yeah.
Variable income. So we have to take averages. So it's a lot different than having an hourly pay. So just stick with your current job through the process.
Perfect. So the big takeaway there is, if you're hourly and you have to change jobs, then make sure you stay at the same pay or more, but at the hourly rate. But if you are going to go from hourly to salary, then I guess the biggest thing that they should do is actually, before they make any commitments or change before we close on their new house, is to probably call you as the lender to make sure that that's going to be okay, or if you advise otherwise, right?
Definitely, because this would absolutely be a case by case, basis, depending on the jobs and everything. So definitely just reach out and talk to your lender and stay in communication.
Yeah, exactly. And I think that's key there. Just be in constant contact with them, especially when big changes like job changes or pay structure changes occur. Awesome. Okay, we're getting down to the narrowing our list. So the next one I have on the list is do not stop paying your bills, including payoffs. So tell us a little bit about that.
Yeah, so this mostly applies for any cash out transactions, like, for example, a cash out refinance where you're pulling money from your equity to consolidate some of your debt. You may think that because we're taking some money out of the loan to pay off your credit card that you don't necessarily have to make that credit card payment during the process. But I would advise against that because we really don't know how long this process is going to take if, we uncover any surprises, and we don't want you to be late on those payments. So just keep making those payments even though we plan on paying them off with the loan.
Gotcha. That's a good one. So do not stop paying your bills. Awesome. Well, let's go to the next one. I think we already talked about this one. This one's reduce your work hours at work. I think we talked about that one in the job section, but that's pretty self-explanatory. If they met with you and you talked to them and they told you they make a certain amount, you just definitely don't want to change that to be lower than what they've already told you that they were making, correct?
Correct. If we qualified someone using 40 hours a week at work, then we want to continue seeing that number throughout the process.
Right. Awesome. This one's a funny one, but a good one, but it makes sense in the sense that it says, do not ghost your lender. We need quick responses with doc requests. So tell us a little bit about that. Have you had any experience with that?
Yeah, so the whole process of the loan application, we're just constantly requesting documents. So in the initial application, I'm requesting some basic docs, your pay stubs, W-2s, things like that. And then once we get to another milestone, there may be some additional requests. And then through underwriting, there's going to be requests as well for additional information. So they think that maybe, after my initial request for documents, that's it. They don't need to talk to me until the loan's done anymore. So please, please, please be responsive, because the loan is only going to move as quickly as your response time.
Yes, and I think this is like really, really important, because in the contract, we are going to be on a timeline where we need to, go through the, financing and appraisal deadlines, the due diligence deadline, and all those other deadlines that we have on the contract. And throughout the process, you may, like you said, you may need more documents than the ones originally that were provided to you. And we definitely want the buyers to present those to you or to the lender in a timely manner, just like you said, so that they don't hold up the loan and maybe even default on the contract. So this
Correct.
one's a good one. Yeah, so do not ghost your lender. Always be in contact with her or him so that we can, always be on track with timelines. All right, we're getting down to the wire. So this one says, and I think this was like a crucial one. It says, do not shift money between bank accounts or make random undocumented cash deposits. So this one is definitely one that I think a lot of people would fall into. So tell us a little bit about this one. Why is this one so important?
Well, once again, we have to have a paper trail for everything. So if you have cash savings at home in your safe and you go deposit that into your bank account, we need to have documentation for that large deposit, because there's lots of anti-money laundering laws that we have to abide by. So we have to make sure that every large deposit is accounted for. So again, this just kind of creates a headache for everyone, having to create that paper trail to make sure this money is legal.
Right. And that is a big one, because sometimes I've had buyers in the past where, they have money just basically under the mattress or in their house, in their desks or whatever. And all of a sudden they're wanting to buy a house and they go, oh, yeah, I have this much in the bank, but I have this other money, not in the bank. And I always tell them, you need to make sure you deposit that as soon as you can, even before we go under contract, just so that it's documented, and then the lender knows that it's there. And if they require more documentation as to where that money came from, then you can at least have time to provide that to them before we even go under contract, so that everything is up and up by the time we are under contract on a house. One thing I was going to ask you about this topic is, so at what point does the lender require documentation of cash being deposited into a checking account? Is it like, if I deposit $100 into my account, is the lender going to care? If I deposit $1,000 into the account, is the lender going to care at that point? So is there like a measurement of at what point the lender will request documentation for cash being deposited?
There is, and off the top of my head, I can't remember exactly the percentage, but I want to say it's 10% of your income would count as a large deposit that would need to be verified.
Gotcha. So if they, for example, make $1,000 a month, just as a really simple example, then if they deposit $100, at that point the lender may or may not want documentation of where that money came from, right?
Correct.
Okay, perfect. So for our listeners out there, this is a key. My recommendation is, when you're initially applying for the loan with Neely or any other lender, just be completely honest with the lender. Be upfront. Tell them where your money is. If you have cash somewhere, let them know where it's at, where it came from, and that way Neely or your lender can advise you of how to best proceed with cash that has not been deposited. Correct?
Yep.
Awesome. Okay, perfect. And then this other one is kind of goes along the same lines. It says, don't shift money between bank accounts or make random undocumented cash deposits, which is kind of what we... Oh, wait, no, that's the one we already talked about. Okay, so this next one is, talk to your lender if you plan to receive gift money. This one is, I actually had an experience with this not just recently. So tell us a little bit more about gift money, Neely.
Yeah, so I don't know if a lot of buyers are aware, but you can absolutely receive gifts from family and friends to pay for your down payment. So if your parents wanted to gift you $10,000 to pay, to help you get into your home, that's totally acceptable. The only thing is we just need a signed gift letter saying that it is a gift and they are not expecting you to pay it back. So if there is gift money involved, we just need to know about it so we can get all the proper letters and documentation that we need.
Yes, and let me just tell you my story about this one. So I just closed on a house this week, and this young couple, first time home buyers, were receiving $10,000 from their grandma in order to help them with the down payment or whatever the gift money was going to be used for. But what happened was the lender needed documentation from the gifter, so in this case the grandma, as to making sure that where that money came from. So they needed bank statements, and the bank statements were not going to be provided. I think it was going to be really tight. We were going to close like on the 17th of February. The 19th of February, but the bank statements for the grandma wasn't going to come out until the 17th of February. So it was really, pushing it really close to our deadline. We did make the deadline and everything, but it was kind of a nail biter there because the underwriters from the lender requested, that they see the bank statement showing that the grandma had that $10,000 in her account, for a certain period of time. So once again, to our listeners, if you are getting gift money, just identify that up front with the lender, when you're going through the pre-approval process, just so that the lender can advise you with regards to documentation from the gifter, as far as where that money's coming from, and so that we're not, having to miss deadlines or anything like that in this market and jeopardize your house. Is there anything else that you would like to add about that topic?
No, I think that pretty much covers it.
Okay.
Just need a letter from the gifter and to see that money did actually come from grandma.
Yeah, perfect. Exactly. Okay, let's look at the other one. Talk to your lender if you need to purchase major items or max out your credit card. So talk to us about that.
So on that one, again, it's just about monitoring throughout the whole process. So we need to make sure that it's not going to affect your loan application at all. So if there is an emergency and something, needs to be maxed out or something needs to be purchased, definitely let us know so that we can, run the numbers and make sure it's not going to impact your qualifying.
Absolutely. One of the things I always tell my buyers whenever I put them under contract is, emergencies sometimes happen. It's just a matter of, it's just life. Sometimes, let's say your car breaks down and you really need a car to, get to work and back and everything. And I always tell my buyers, if you're going to make a major purchase, make sure you talk to your lender first, because you don't know how that might affect your loan. To buy the house, especially if you're, really close to, closing on the house. You just don't want to risk any risk of that impacting you negatively, so that you're not able to buy at the very end. So I always advise them, if you're making a major purchase, talk to your lender, make sure that he or she is aware of what you're doing, and they will definitely advise you on what to do and what not to do in that case.
Yep. Exactly.
Awesome. So the last one is pretty self-explanatory. It says always pay your bills on time, especially during the loan process. Have you ever had experiences when people have missed their payments and it kind of affected it negatively?
No, I haven't actually experienced that personally, but I have had some borrowers who told me they were planning on not paying some of their bills, again, during a cash out refinance, and I advised that probably wasn't wise to do. The reason being is because when we initially apply for the mortgage, we're going to verify your employment and we're going to verify your credit. And then the week before closing the mortgage, we're going to do the same thing. We're going to reach out to your employer and verify that you're still employed. And then we're also going to do a supplemental credit report to make sure that there's no additional credit, to make sure there's no late payments or anything that's different from when we initially pulled it. So we just want to make sure that everything stays consistent through the process.
Yes, well said. And I always tell them, pay your bills on time. Don't do any lavish spending. And just keep a really low profile. Don't go out and be extravagant or living high on on things before while we're under contract, just so that everything is good. And once we give you the keys to your new house or you finish your refinancing, then you're free to do whatever you want. But until then just always follow the instructions of your lender with regards to any of these topics that we discussed. So
That's right.
Yeah, I know. I've heard a lot of horror stories as well. So in purchasing a new home, Neely, I've heard that lenders sometimes will verify everything even the day of closing. Is that right?
That is right. Yeah, especially employment. We want to make sure you still have a job on the day we're closing. Especially with COVID and everything, like things have gotten a lot more strict. So, we're definitely making things a lot tighter in regards to employment and credit and everything. So, yeah, it's not like it used to be.
Yeah, exactly. Good deal. That's our list. That's our entire list. I think that definitely will help all of our listeners as to things what they should not be doing when they're in the process of refinancing or in the process of purchasing a home. So Neely, if any of our listeners want to work with you and reach out to you and have you help them buy or refinance onto a house, how can they reach you? And give us all that information.
Yeah, so most easily would be finding me on Google. Just Google my name, Neely Zimmermann, and all my information will come up. I'm also on several social media platforms with my username as Neely Loans Utah, and that's just UT. So yeah, I'm on TikTok, Instagram, Facebook, LinkedIn, pretty much everywhere you can find me.
Yes, and I see you on social media. You do an awesome job. I love your TikTok videos, especially. They're pretty entertaining.
Thank you.
So Neely, thank you so much for taking the time. I know you're busy out of your day to educate us on all these things that a buyer or a person doing a refi should not do while they're in that process. I really appreciate it. And anybody that's listening, if you needed somebody that can do a really good job in helping you refinance or do a new loan to purchase a home, talk to Neely Zimmermann, and her name is spelled Neely. And Zimmermann, how do you spell Zimmermann, Neely?
Zimmermann, so 2 N's at the end.
Yeah, that's the difference between all the other Zimmermans. Yours has the 2 N's at the end. Perfect. Anyways, I'm going to let you go. Thank you so much once again, Neely, and have a fantastic day.
You as well. Thank you so much, George.
Okay, take care.
Okay,
bye-bye. Thank you for watching and have a fantastic day.